If you did everything right and still lost, this channel doesn't fix your strategy. It fixes the way you see the market. Have you ever wondered if there is a way to recognize the exact moment whales begin to enter the market? I believe you have thought about it before. Maybe after a sudden crash, when you FOMO in with the crowd, price reverses and your account evaporates within minutes. Or maybe after a fake breakout, you thought you had caught a big move, only to realize you were the last one to arrive at a party that was already ending. I have been there too. Years ago, I believed that if I could find a strong enough indicator, a tool precise enough, I would be able to see what others had not yet noticed. I dove into indicators, RSI, MACD, Bollinger Bands, order flow, Wyckoff, COT reports, smart money concepts. I analyzed everything. I studied almost everything there was to study, but the result never changed. I kept losing. Until one day, I met my mentor. That day, I brought him a gold chart and asked, "Can you take a look for me? Is this a strong breakout signal?" He didn't answer right away. He lit a cigar, took a deep drag, placed his hand on my shoulder, and said slowly, "Price isn't really going up. It's only making others believe that it will." I froze. He drew a horizontal line right at the exact level where I had just entered a buy, then continued, "Whales don't leave traces through big volume or large candles. They create areas that feel trustworthy, and that trust is what eventually drowns the ones who step in." I looked back at the chart and began to notice something. Right before every strong move, there is always a long period beforehand. Price goes sideways, no volume spike, no violent movement, but that is exactly where whales are quietly accumulating. From that day on, I understood something very different. The dream of most traders is not about predicting direction correctly. It is about recognizing who is truly playing the game behind the chart. And my mentor, a man who never chased news, never guessed tops or bottoms, taught me only one thing. If you want to see whales buying, don't look where price is moving fast. Look where price stays quiet but refuses to leave. That was when it started to make sense. A chart is not just numbers, it's a psychological map, a place where the strong don't need to speak, yet still leave traces for those calm enough to notice. And if you are calm enough, I will tell you this, how I learned to follow those traces, and how, for the first time in my life, I won a trade that almost the entire market doubted. He never gave me a formula to win trades. He never taught me which indicators to use. What he passed down to me was a way of seeing the market from the perspective of those who truly control the game. Through slow conversations over tea, inside a small room with no air conditioning, no price alerts, no news noise, I began to understand something very different. Trading is not the profession of predicting where price will go. Trading is the profession of observing how people react when greed and fear appear at the same time, and taking advantage of the imbalance that creates in the crowd. If you are listening to this today, perhaps you're standing at a familiar crossroads as well, between continuing and stopping, between doubting yourself and trying to believe one more time. I made this video partly to answer the many questions you've sent me over time, and partly as a quiet thank you to those who have followed quiet trading since the early days when almost no one knew this channel existed. I know you could choose to watch thousands of other videos, but you are still here, and to me, that means trust. Thank you. Not just for watching, but for believing that even in a chaotic market, there can still be a small corner where we slow down and look at things more clearly. And if you are ready, I will continue the story. In my first lesson, my mentor didn't teach me how to trade. He taught me how to observe in silence. That was when I began learning how to recognize where whales are truly buying, even when no one says a word. I still remember that rainy afternoon, the wind tapping lightly on the tin roof of a small riverside room. He sat there, holding a cup of hot tea, his eyes fixed on the laptop screen. The chart in front of us was completely clean. No moving averages, no volume, no RSI, no indicators at all. At that time, I was still a naive trader, believing that the more tools I used, the safer I would be. He gently pulled a bamboo chair closer and said quietly, "If you need too many things to convince yourself to enter a trade, it means you are still afraid." That sentence hit me straight in the chest. I didn't fully understand it then, but I stayed silent. He opened an H1 chart of XAU-USD from a few weeks earlier. He pointed to a price area moving gently back and forth with no explosion worth noticing. I asked, "What's special about this area?" He smiled. "Precisely because you see nothing, that's where whales act. They don't need to push price aggressively. They only need most people to stop paying attention." He pointed at a few small candles, long wicks, narrow bodies, unremarkable volume. "Do you see? Price gets pushed down, but every time something pulls it back. Not strong enough to create fear, not clean enough to create hope, yet that place was the most important zone of all." I asked, "Important how?" He nodded, "Because that's where large money is patiently accumulating without making any noise." From that moment on, I started looking at charts differently. Not searching for patterns, not waiting for signals, just observing where price has been and why it still refuses to leave. And I began to see it. Levels tested again and again but never broken. Wicked candles appearing right after bad news. Small pullbacks that were never strong enough to break structure.
He looked at me for a long moment and said quietly, "Whales don't leave traces with long candles or explosive volume. They leave traces in movements that look illogical." Then he said something I still remember clearly to this day. "Price is just a distraction. Don't listen to what it says. Watch what it's trying to hide." My first lesson with him wasn't about strategy. No setup, no entries, no stop loss, risk reward, or textbook formulas. What I received wasn't a way to place trades, but a completely different way of seeing the market. A perspective that stopped me from behaving like a gambler chasing quick wins and turned me into an observer, patient, cautious, and aware that the market doesn't pay the smartest trader. It pays the one who understands the game being played. From that point on, I stopped hunting big moves. I started looking for the silence before the storm. Before, I believed that if I wanted to know where whales were active, I should look for huge candles, sudden volume spikes, violent price movements, and noisy trading groups. I thought explosive price action meant smart money had arrived, so I chased it. Most of my trades were placed after long green candles, and I got swallowed. There were times when I bought right after a clean breakout, only to watch price reverse sharply minutes later. Before I even understood what was happening, 5 to 10% of my account was gone. I was angry. I blamed the spread, the broker, the market. But I didn't realize this. That big candle wasn't a whale's footprint. It was proof that the crowd had just been successfully lured. Later, my mentor told me, "Whales don't enter where it's loud. They act where most people don't even realize anything is happening." Big candles, high volume, that's the moment the last participant steps in and the door begins to close. I stayed silent. I looked back at all my previous losses and noticed a very clear pattern. I always entered after the explosion. But after the explosion, there was no real driving force left because the big players had built their positions long before that, in areas I once thought were meaningless. Quiet ranges, dried up volume, no discussion, no attention. Places I would have skipped if I lacked patience. Most people see waves and think the ocean is moving. Those who understand watch the tide rising even when the surface is perfectly calm. From then on, I trained my eyes like training a blade. I stopped staring at noisy zones. I searched for forgotten areas, places with small candles but meaningful wicks, places where price was pushed down yet couldn't fall further, places where most people were still doubtful while whales were quietly laying the foundation. If you pay attention, real market explosions don't begin with noise, they begin with an unusually long silence. And when the noise finally arrives, the door is usually already closed. That's why the first lesson my mentor passed on to me wasn't how to enter trades, but how to recognize what silence is hiding. Where the market pretends nothing is happening is often where everything is changing fastest. Do you remember that gold chart from that day? 4 small candles, an old support zone, nothing remarkable. Yet that was exactly where my mentor placed his trade, and I watched a powerful rally unfold afterward, sending price hundreds of pips higher, while most people stayed out because they didn't see a clear signal. That's when I finally understood. The market isn't built for the loud. It's built for those calm enough to stay silent before everything begins. And if you're ready to look at the market through a whale's eyes, I'll continue showing you how to recognize the quiet accumulation footprints my mentor left behind. He always said one simple sentence: whales don't swim with the school, they swim at the bottom. The places where light doesn't reach are often where the hunt begins. In trading, those are the silent accumulation zones, where price barely goes anywhere, candles so small that they slowly drain your patience, volume dry like a stream in the middle of summer. At first glance, it looks like nothing is happening, but that's exactly where something is being prepared. My mentor never looked for accumulation through obvious signals on the chart. He looked for inconsistencies hidden beneath what appears logical. First, price is tested repeatedly but never breaks. He marked a support zone that price had touched 4 times. Each time it looked like it should fail, and each time there was a strange rejection wick. Not strong enough to trigger a breakout, but precise enough to hold price in place. If that level were truly weak, it would have broken long ago. And if it still holds, it means someone is pushing against what should happen. Like a door that keeps getting knocked on but never opens. Either someone is inside, or that door was never meant for everyone. Second, bad news comes out, but price doesn't fall. There was a time when the market received bad news about GDP, interest rates, geopolitics, but gold didn't drop. People were confused. Forums went quiet. News traders began to doubt their own approach. My mentor only said softly, "That's the first sign." When bad news can't push price down, it means large money is already standing against the crowd. Watch closely. When negative news hits and price refuses to break, it's usually because someone has already built a position. They don't need good news to buy. They only need good news to push price higher when the crowd rushes back in, afraid of missing out. Third, small rejection candles inside silence. My mentor called them test candles. They don't stand out. They're not highlighted. No one talks about them on YouTube. But those candles show absorption taking place. Selling pressure is there, but it's absorbed almost immediately. No momentum, no follow-through, just a wick, then silence again. Fourth, the crowd becomes bored and leaves. My mentor once said, "Whales accumulate not when the market is most fearful, but when it's most bored." Fear still has energy. Boredom is when the crowd exits the game. Watch forums, Telegram groups, communities. When people start talking about other things, complaining, saying there's nothing to trade, that's when the game truly begins. I once followed a chart like that. Euro-USD went sideways quietly for 2 weeks. Then one session, price returned to an old support level. No news, no breakout. I hesitated. The setup didn't look clean. No one was talking about it. But I still placed a small buy limit just to test. 6 hours later, price surged upward. No news followed, just pure movement, like water that had been building pressure and finally found a way out.
My mentor said, "Watch where people walk away. That's often where whales are quietly loading." Trading isn't about finding where the market speaks loudly. It's about recognizing where the market is trying to hide its voice. Real strategy is not found in what's obvious. It exists in the moment when the market pretends nothing is happening while everything is being prepared for an explosion. I used to hate sideways markets because when I first started, I was taught to only trade trends. Sideways was considered dead space.
And I believed that for almost the first 2 years. I avoided all accumulation zones. I didn't want price to go sideways. I only waited for explosive moves, up or down. I liked big candles, high volume, violent breakouts. I needed drama because I believed where there was action, there was opportunity. But I was wrong. Much later, I finally understood something. Price is never truly standing still. It's just that we're not deep enough to notice how it's moving beneath the surface. My mentor once said, "Sideways is when the strong are laying foundations. Only the weak need the market to show emotion." He pulled up a BTC USD chart for me. Price had moved sideways for more than 12 days. Almost no one was paying attention. The candles were dull, emotionless, no story. But inside that silence, price tested the bottom 5 times and never broke. 3 small pin bars appeared right at support, and only once, just once, volume ticked up slightly at the bottom with no news at all. I asked him, "How do you know this is real accumulation and not just coincidence?" He took a sip of tea, looked out the window, and said slowly, "There is no coincidence when something happens 3 times in a row and still doesn't break." The market's instinct is like the human body. When it doesn't react, it means it's absorbing a much larger hidden force. The more I listened, the more I understood. Whales don't need noise. They only need to make you ignore the most important thing by making it look boring. They don't attack with volume, they attack with patience. I still clearly remember a time when I missed one of the biggest opportunities of my life simply because I dismissed a price zone that felt too quiet. USD JPY was moving sideways on the H4 timeframe for more than a week. Everyone said, "Not worth trading." I thought the same. I waited for a breakout, but price didn't break upward. It dropped for exactly one H1 candle, then snapped violently upward. What followed was a brutal rally. In less than 12 hours, price moved over 400 pips. Looking back, every sign of accumulation was already there. I just wasn't quiet enough to hear the market whisper. My mentor used to say, "A good sailor doesn't wait for waves, he listens to the wind. A good trader doesn't wait for breakouts, he sees the shadow of money before it leaves footprints." From that point on, I completely changed my approach. I stopped chasing action. I started observing quiet zones. I learned how to wait like a hunter. No rush, no hesitation, no need for confirmation. And when everything became clear in my own way, I entered silently. No showing off, no asking for validation. Those trades, the quiet, lonely ones, turned out to be the most profitable trades of my entire journey. And now, if you're still here and you've begun to see the market through a different lens, I'll continue. I'll show you how I enter right at the moment when the crowd starts losing patience, because that's when the game truly becomes interesting. After many years, there's one thing I can finally say with confidence. The crowd is not wrong about direction. They are almost always wrong about timing. They FOMO too early, they cut losses too late, they buy the top and sell the bottom, then call it an unfair market. I remember very clearly one Tuesday morning, the market was hit by bad news about the UK PMI index. GBP USD was falling freely. Telegram groups exploded. "Sell now. GBP just broke support. Strong downtrend. Target 1.1900. I looked at the chat, and it was true.
Price had just broken a support level that had held for nearly a month. The H1 candle was a long red bar, exactly the kind I used to love. But this time, I didn't jump in. I remembered my mentor's words. If everyone sees the same signal, the whales have already left the table. I switched to the H4 chart. I saw a breakdown, but volume wasn't high. I saw candles starting to form a long lower wick while fear was still spreading everywhere. I turned on the heat map. Heavy liquidity was sitting right below the newly broken low, and I understood something. This was where thousands of stop losses had just been wiped out. I placed a buy limit a little lower, a small position, no big expectations. I just wanted to experience what it felt like to stand on the other side of fear. 10 minutes later, the order was filled. 20 minutes later, price was still chopping, but it didn't drop further. 1 hour later, the H1 candle closed as a hammer. 3 hours later, price snapped upward like a spring compressed for too long. I said nothing. I just sat there and watched. That single trade made more profit than my entire previous week. The strange thing was this, not because I read the news earlier, not because I had a special indicator, only because I observed crowd psychology and chose to stand on the opposite side of their emotion. My mentor once said, "When people panic and run away from the firefighter is the only one moving in the opposite direction." Whales don't need the crowd's approval. They enter when the crowd is still doubting, still cursing the market, still losing faith. Because when people stop believing, that's usually when price is preparing to reverse. And honestly, this isn't new at all. History has repeated this pattern hundreds of times. When Bitcoin fell from 69,000 to 30,000, no one dared to touch it. But that was exactly when large money started quietly accumulating. At 40,000, people felt regret. At 60,000, they FOMO'd again, and then they lost again. I'm not telling you to always fight the crowd in an extreme way. I'm sharing a very expensive lesson. When the crowd starts saying it's going lower, pause and observe carefully. You don't have to buy, you can stay out, but don't blindly run with them when the market is actually entering an absorption phase. In the end, trading is the art of going against, but not recklessly. It's the art of reading the crowd's exhaustion and choosing your position before they return. Those trades are usually very quiet, very lonely. No one believes in them. But those are exactly the trades that create real wealth. My mentor often said, "The biggest trap in the market is not fake news and not fake candles. It's the real psychology of the crowd when they believe they are right." When I heard that, I froze. Because for years, I thought winning the market meant being faster, smarter than everyone else. But real victory is not about speed. It's about the courage to stand still while everyone else is running. Violent drops, long red candles, overwhelming negative news, they're not accidents. They're a script played over and over again throughout market history. The only difference is this: every generation of traders believes this time will be different, and then they sell the bottom out of fear, buy the top out of greed. They aren't defeated by the market. They're torn apart from the inside by their own emotions.
It only takes one candle breaking the low for people to throw all their discipline out the window. They forget their plan. They forget the higher time frame. They even forget the very entry rules they once promised themselves to follow. Why? Because they see the crowd running, and they're afraid that if they don't run too, they'll be the one left behind to die. But my mentor wasn't like that. He always moved in the opposite direction. He never panicked when the market suddenly spiked or flushed. He just sat there calmly, as if he was waiting for something else. I once asked him, "Why aren't you reacting? Price just broke the low aggressively." He nodded, took a sip of tea, and said, "The market is only truly dangerous when it makes you want to react immediately. Rushed reactions are the reflex of someone being controlled. Deliberate reactions are the mark of someone in control." That's when I began to understand. The best trades don't come from beautiful signals.
They come from the right state of mind. And that state of mind is something not everyone has. It's forged through painful losses, through sleepless nights, and through clarity when you hear the crowd start speaking with one voice. There was a time I was watching USD CHF. Bad US inflation data had just been released. The dollar was being aggressively sold. The entire market rushed into shorts. Analysis groups drew countless scenarios, all saying the same thing. Price hasn't reached the bottom yet. But I saw something different. A small candle with a long lower wick, low volume, nothing impressive, except for one detail. It appeared exactly at a level that had been the bottom 3 months earlier. I remembered my mentor's words. Whales don't ask how far price can go. They only ask, does anyone still dare to enter right now? I placed a buy order. It didn't trigger immediately. Price hovered for a few more hours as if the market was testing me. Then it moved, strongly, very strongly. No headlines, no noise. And the people who had panic sold just hours earlier started to regret it. At that moment, one truth was burned into my mind. The people who make money in this market aren't the smartest. They're the ones who do the opposite at the exact moment the market makes everyone else lose faith in themselves. You can have every indicator. You can analyze the direction correctly. But if you enter at the same time as the crowd, you will lose. Because at that moment, you are the liquidity for someone who has been waiting for you all along. And the most painful part? You won't even understand why you lost. Not until someone, like my mentor, shows you the full picture. So if you've ever lost because you entered after a long red candle, if you always feel like you're late, even when the setup looks perfect, it's not because you lack skill. It's because you're not calm enough to see through the artificial noise the market is creating. I'm not sharing this to tell you to always trade against the crowd. I'm sharing this to remind you of one thing. Stop, observe, and listen to the crowd's breathing. Because when they start screaming, that's usually when the whales start feeding. I once asked my mentor a very naive question. How do you always win in this market? He smiled. He didn't answer directly. He picked up a small stone, threw it into a lake, and said, "Do you see that? Every throw creates waves. The waves spread, then they fade, and in the end, the water becomes still again, as if nothing ever happened." The market is the same. There are waves, there is volatility, there is pain, but after everything, it always returns to stillness. My mentor once told me that money flow in the market moves like a biological cycle. It is born, it spreads, then it slowly gets gathered again, preparing for a new life cycle. If you observe long enough, you'll notice a pattern that repeats itself. Every major bull run starts from places where most people believe this thing is already dead. And every painful crash happens at the exact moment people are convinced it can't possibly fall anymore. The market didn't betray you. You simply believed it had to move according to your expectations. My mentor never taught me how to trade every single day. He taught me something far more important: how to survive. A trader doesn't need to be the best. They only need to be the ones still standing after most have already left the game. The market is like a dense jungle. Everyone thinks they're the hunter, but most are just prey walking confidently into traps. The survivor is the one who knows how to hide, how to wait, and how to recognize the trap before stepping into it. I used to believe that to make a living from trading, I had to trade a lot, catch every move, stay ahead of the market. But the deeper I went, the more I realized a paradox. Silence at the right moment is more valuable than any complex strategy. One single trade, if truly mature, can be worth more than 100 rushed ones. Have you ever wondered why whales don't hunt when the entire school of fish is in chaos? Because when everything is noisy,
every move becomes random. They wait, they observe, they stay hidden in deep water, and when the crowd starts to lower its guard, they don't need to move fast, they only need to move right. That's how I learned to live, slower, fewer trades, but with deeper understanding. I no longer ask, when should I enter a trade? I ask, who is being driven by emotion right now, and who is actually controlling the flow of money? I made this video not to teach you how to win, but to help you learn how not to lose. Not losing because you trusted too easily, not losing because you were impatient, not losing because you followed the crowd without ever stopping to ask, who is setting the rhythm of this music? You don't need 100 trades a month. You only need a few right trades in a year if you understand when big money is truly accumulating. You don't need to predict tops or bottoms. You only need to understand this. Price always tells a story, but it whispers only to those who are calm enough to listen. Before I leave the screen each day, I always remember a sentence my mentor once wrote by hand on an old piece of paper placed next to my trading desk. Don't ask when the market will rise. Ask this instead. When it rises, who will be left behind? Thank you for staying until the end. If something in this video made you pause for a moment, I believe somewhere my mentor is smiling too. And if you found value here, leave a comment or share this video to someone who needs it most. Marubozu will continue to tell more stories, not trading tricks, but the mindset of those who truly survive and go the distance. See you in the next quiet zone where the whales begin to swim.